which is a coin issuer. But that's probably the most interesting IPO we've seen all year. And here it is June. So the fact that interest rates are still, quote unquote, elevated compared to a couple of years ago is putting a bit of a damper on the party in terms of Wall Street, new deals come to market, that sort of thing. And it is causing a lot of creative destruction in the world of private equity. We just saw CalPERS come out bragging that they made, I think, 10, 11% on their private equity portfolio, which is nothing compared to the public benchmarks like the S&P and most of the big ETFs that are issued by retail firms. So the question is, why on earth would any rational person ever invest in private equity? It's a horrible deal. And many of these firms now can't go public. So what's happening is they're going to break them up and sell them in pieces, if you can believe that, Julia. It's kind of reversing the narrative rather dramatically. So I guess the way I would put it is, Donald Trump is causing a lot of changes in the world of finance and the economy. People are looking for slower growth. And we're also not really looking to get the financial party started. But with all of that said, I would still tell you that many can't see the Senate rolling over entirely for President Trump right now. So that's going to be an interesting thing for the markets to digest, isn't it?
Yeah. What do you make of the big, beautiful bill?
It was always kind of wishful thinking, triumphalist thinking on the part of President Trump, I think, to get this all into one bill. It's easier to deal with many of these issues piecemeal, but obviously that takes longer. And the president is in a hurry, as you know. So I think the odds of it actually passing is still probably a coin toss, 50-50.
Yeah, I think I'm just looking right now on the prediction markets on Kalshi. It looks like you're right, like a 50-50 here. Yeah.
The Fed will stop reducing the balance sheet this month. They've already indicated that. But I don't see them changing the target for Fed funds, frankly, because inflation is still rocking along. This economy, Julia, is still benefiting from the liquidity that was put into the system 3 and 4 years ago. So until that is gone, are going to stop on October 1st. So many, many hundreds of thousands of people who have been in forbearance for the past 4 years because they could, are now going to either have to move or start paying their bills again. So there's going to be a contractionary impact to all of this. And I think you're going to see defaults and foreclosures start to rise as we get into the end of this year.
Yeah. You mentioned at the top too, like that it's a bit of a mixed bag and the stock market will probably perform well. Can you explain the thinking there?
Well, where else are they going to go? People always are talking about how they're going to leave the dollar and the dollar is no longer going to be the global reserve currency. But the reality is there's not very many places to go. Where do you go? Japan? I was laughing about this IPO I mentioned earlier, Circle. They allow you to create your own coin world, okay? But it's still pegged at $1. I thought these new technologies, Bitcoin, blockchain, all the rest of it, right, was supposed to help people escape from the world of fiat currencies. But we're still pegged at $1. Why? That's
I did not know that.
Get rid of them. The use case for many of these assets has changed. We need to knock down the existing buildings, build something new that actually fits the needs of people today. You could say that about most of Manhattan. I personally think we should start at Canal Street and just bulldoze everything and begin again. Because, what are we going to do with 150-year-old tenements? These buildings do not work given the cost of running an apartment building or a small commercial building in New York City. It's just too expensive. So I think there's a lot of opportunities here. The question is, are we in a mode where we can change? And that another have managed to keep up or indeed even exceed the visible rate of inflation. Now, real estate for a long time was an easy game. People would go invest in real estate and it would just go up. They didn't even have to think about it. Commercial real estate went up for 75 years after World War II. You could see this in people like Donald Trump's father, Fred, and my old friend Dale Hemmerdinger, who passed away during COVID. They started in Queens, and that ground that they built on only ever went up in value. So they were able to borrow against it and go out and do more things. You essentially created capital with inflation. So today, I think we still have a similar situation But certain markets are cooling off. Real estate. You have an awful lot of excess supply now in many markets, especially down south, like real estate. To need to go up every year, you have to have a certain amount of inflation. Otherwise, the system doesn't work, right? The whole American system is built on inflation. So if you go back to the Humphrey Hawkins legislation, which again was a compromise between the Republicans and the Democrats. The Democrats wanted to guarantee everybody a job. Republicans said, well, no, we'll have the Fed do full employment, right? Well, in order to have full employment, you have to have inflation. It's the only way it works. It's an illusion politically, but it's the only way to keep the system moving forward, because the alternative is to have prices go down. Bad. That's when you go back to the 19th American political debate, but not so much now. The period after the war, the neoliberal period, if you will, kind of made these issues fade into the background, because in the U.S., whenever the economy slowed down, we just dropped interest rates. Voila. You had GDP growth. Boom. It was almost too easy. Now it doesn't work that way. If the Fed were to drop Fed funds down to 1% tomorrow, how much would GDP pick up? Not very much.
Is there a way out of this?
Oh, yeah. No, we have enough physical assets in this country that I'm not really worried about debt default.
Is there a point where you would be, though?
No. See, there's the difficulty is you have a lot of progressives in this country who think, well, if we get in trouble and, the Chinese and everybody else don't want to buy treasury bonds, the Fed can buy them. They think that's an escape. But the reality is, when you did that in 2020-21, what happened? The banking system grew by 50% in 5 years. So you do have inflation, and it does ripple through the system, first and foremost in the banks. They're not making any more money. Their balance sheets are just bigger. You hear Jamie Dimon talk about this all the time. He doesn't have enough use for all the money on his balance sheet right now. He wants to give it back to his shareholders. So when you hear a banker like that telling you that there's not enough demand for credit, the economy was even more and more difficult, you saw the emergence of these things called buy now, pay later. What a great business. I'm going to bank people who can just barely afford to buy food. So I think these are all symptoms of a larger malaise, which is that we've kind of run the course of using monetary expansion, low interest rates to create the appearance of growth, to your point, right? What we want to do is say, what's the real growth in the United States? If I subtract the real inflation that's hitting people on Main Street, what do I have left? And at 2%, I would tell you we have no growth at all.
So maybe not a recession ahead, but maybe just like growth or very low growth.
Yeah, stagflation is the term, the clinical term. But Trump has been attacking the Fed, saying, you got to drop interest rates by a point. Well, for the financial people, the private equity moguls and the Wall Street types, yeah, that's true. They are constrained right now. I wrote a blog piece a while ago that said, look, you need $400 billion worth of cash. You should buy out the common shareholders, the public shareholders of Fannie Mae and Freddie Mac, and issue preferred. Because the only way I can get Treasury cash to fill in a hole in the budget is to restructure the GSEs. Selling voting common shares to the public is going to be difficult. And if Treasury tries to do that, I think they'll take a loss. In other words, they wouldn't get dollar for dollar of their investment in the GSEs. But if we, use a little bit of imagination, I think there is a way to make it happen. The difficulty is that mortgage rates will probably move higher if they take them out of conservatorship. And that may kill the idea right there. The Democrats are already trying to get organized to oppose it.